What's up, guys? Everyone is doing well. In this video, I'm going to be going over some updates for Bitcoin because now it is finally beginning to show some glimmers of hope and promise, potential intrigue going forward, because the price action since the local low going back to late November, somewhere around $80.5 thousand, has been very agonizingly boring and very ambiguous. Clearly, we're in a relief stage. Whether or not this relief will culminate in breaking resistances, going back towards the prior all-time high zone around $120,000 to $126,000 and continue to go higher in price discovery, or this one culminating as dead cat bounce, which is really where I've left off as the main point in the past few videos. The last video was about 2 weeks ago. Really just haven't been uploading anything because there's nothing interesting really to talk about, nothing new. It's very boring, as I said. But now we can see that the 4-hour chart here, the descending resistance, been intact since the current all-time high at around 126.3 thousand, is being tested here on the 4-hour, which is lining up with testing the 200 EMA. We saw here at the beginning of this relief, this is where the resistance first, structurally speaking, in a notable manner came into play here. We're testing that again. Now it's finding confluence with this descending resistance. It's also going to be quite crucial for this 4-hour chart to get back above what was priorly support. It's been consistently a stubborn resistance here, so getting back above that somewhere around, depending upon when it happens, around approximately $92,000. It's going to be very important going into this new week, into the rest of this month, which, I mean, obviously there's only a few more days left, but going into 2026, how this ends up playing out is going to be very crucial. If you look at the 12-hour chart, there's a shorter term descending resistance that is near to becoming, we're getting near to testing it more solidly. The 50 EMA band has been the biggest opponent on the 12-hour chart, getting back above that, which currently we're testing the upper bound. It's just approximately 90,000. So seeing a flip of this band here on the 12-hour, moving up to the 800, 200 EMAs right here, somewhere around 97,000, give or take a couple $1,000. That's going to be a first zone to look out for. If we look here at the daily, we'll zoom in. As I mentioned on the 4-hour, we see the descending resistance stemming back to the current all-time high being tested. We're seeing the daily here is breaking above it. Similar to the 12-hour, the daily here breaking above the 50 EMA band here, which the upper bound's around 95.5 thousand. Going to be a first area to look out for. Then moving up to the 200 EMA here, this general horizontal zone, which you can see here was resistance, support. Now it's flipped into resistance, and it will likely, unless it blows right through it, which I doubt that it's going to do that, come into play once more. We might see a move up here to some consolidation. In best case scenario, we'll see Bitcoin continue to go into price discovery, or we'll see some rejection here into lower lows, or to go back to, let's for example use this 12-hour chart. Let's say that we find resistance here. Either we'll come down and retest horizontal lows, or we'll continue to go lower. In that sense, if we do go lower here, if we look at the daily, we would see something along these lines, and the RSI would likely, in a bullish case, form a bullish divergence. But if we do look here, zooming in a bit more on the daily, we're also seeing that the 800 EMA here is going to be a crucial support. So if we do see that retest around horizontal zone holding this, it's going to be very important. Well, we might see a number of daily candle closes below it. I don't particularly think that's an issue, but if this generally holds a support, that's going to be very crucial. If that doesn't happen, then the next zone to test will be this horizontal zone, which is my final line in the sand. I've said this plenty of times throughout the last number of the videos over multiple months, that if this horizontal level here, which is the horizontal macro low of the current bull run structure, going back to the beginning, analyzing it up until now, this is the prior macro low structure. So that breaking won't be good, which I think, more likely speaking, would be really that very that alarming gunshot that triggers or really cements the fact that the bull run has ended and the bear run has begun. Now, if we look here at the 2-day chart, we'll also see the RSI here getting more oversold than back at the prior macro structural low, the horizontal low that I was just speaking about, which is generally a positive sign. We're seeing some hidden bullish divergence We're seeing the RSI testing the 38.2 level here. The Bollinger Bands are getting quite compressed. And so I think, at least right now, an expectance for either a move up to around the 50 EMA band here on the 2-day, around the 200 EMA as well, somewhere just pushing. We've already hit around 90,000 or so, somewhere around 95 to 100,000 would be the next zone. Again, it just generally lines up with this kind of median here, this cross section in between varying supports and resistances. We're seeing the MACD has been flipping upwards. It's encroaching upon the 0 point. We could see a bullish flip in that sense. The RSI has been also building up here, continuously being rejected along the midline here at 50. Once we see that flipped, for example, if we see here the RBL is just trading above this midline the entire time, it corresponds with bullish volatility such as we saw here. So seeing this flipped, we see the RSI spike up here back towards like 50 and higher. The MACD flipping above the 0 point is going to be very crucial to see. In tandem with that, we'll see probably the price at least coming up and testing the 50 EMA band here. If it can manage to hold support there, or maybe it blows right through it, that's going to be the best case scenario. If we look here at this weekly chart, another very interesting find that I made recently that I haven't spoken about is this ASO down here. And we're going to just focus here on these blue lines that are in the shape of a megaphone, where we see an ascending support, descending resistance. We see the rejection here, 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 and then we see in white support. In the white lines, the bullish sentiment, the black lines, the bearish sentiment. And we can see that each time we see the bearish sentiment being rejected here, aligned with this local low, the rejection here aligned with this local low, and the rejection, the one we're presently on, we're starting to see it round off and look as it just look like these past instances along a resistance that has clearly already been intact and in place. So we could be seeing the price rounding out here, finding support and moving into, at the very least, retesting the rough high zone, then facing that final rejection, or moving into further price discovery here upwards towards $130,000 and higher. And if we also look here that the typically the rising here of the bear sentiment and the falling, and the same could be said here for the falling, rising, and the bullish sentiment, each of those periods of falling, rising are roughly the same period of time. And so if we see the pattern play out relatively the same, at least highly self-similar, then we could expect for Bitcoin to be somewhere towards the upper bound of the 50 EMA, pushing around $112,000, $115,000, $118,000 or so by Q1 of next year, sometime in Q1 of next year, likely towards the first half or so. And then I think going into spring of next year is when we could potentially, if this even ends up unfolding, if there still is one leg, or there's still some more strength in the current bull run, I think by late winter, so we're talking like late February going into March, going into spring, is when we'll really start to see Bitcoin hitting somewhere around prior all-time high, somewhere around $130,000, and then eventually going higher into later spring, perhaps early summer, where we could potentially see a top out here with somewhere within this zone. I still think somewhere around like 170 upwards towards $230,000 is the most reasonable range. If we do go higher, we could potentially see a retest of this ascending resistance zone that's been intact since the double top of 2021 here, the prior bull run, which could, if we see a top out sometime around, let's just say at earliest around like February, it's anywhere from around like 130 towards $140,000 could end up being the final rejection point as well. If we look here at this weekly chart, we'll still see here this ascending resistance zone here that I pointed out in one of the recent videos, where I see it was resistance here. I see here it flipped in support, rough, bottom wick support here in March of 2020. It was support, throughout a lot of the current bull run. We could really say it's kind of the general zone that's been holding up the current bull run. And then we see this yellow zone here. Plays a similar role, has this alternating supports and resistances, but it's been the resistance of the entire bull run so far. And if we do see Bitcoin move back up to that by sometime around spring of next year, then that's going to be somewhere around the $200 to $240 to $50,000 price range. And another reason why I think spring is important, spring of 2026 to be specific, is important is because something which I've been speaking about since at least around probably the first half of 2024, so definitely by late 2024, is a temporal trend we've seen here with Bitcoin and its current bull run, and how it's been basically permeated into the altcoins as well. You could basically superimpose Bitcoin on many a number of the altcoins, and they're following a temporal pattern. And we can see here that this first leg here peaked April, so spring of 2023. Second leg here peaked, and again March, April again, spring 2024. And if the pattern would have followed through with less temporal extension of the what would be here, this I'm categorizing this as the final leg, where we see first leg, second leg, we're seeing an extended third and final leg here to higher highs, then we would have seen sometime closer to spring, somewhere around here, if Bitcoin would have continued to go higher, of this year to have been the all-time high, following through the pattern where we see spring 2023, spring 2024, and it should have been in spring 2025. But I think due to whatever reasons, you want to call it manipulation, if you want to call it macroeconomic influence, whatever you want to call it, whatever rationale you want to put behind why the market does what it does, I think basing on the the general bullish assumption that there still is at least a rather strong leg up in Bitcoin, and especially for altcoins as well, because they've been so overdriven, a lot of them towards the downside, having, if you compare them to Bitcoin, which is just kind of just a general rule where they're not performing as well. Either altcoins have been in a downtrend this entire time, or they were in a downtrend and they entered into an expansion phase, but they're just very lackluster compared to Bitcoin. What we're seeing here is an extension of this third leg and falling into that temporal pattern. Then this would put the next stage at March, April, sometime spring 2026, which is anywhere from around this zone right here, which, like I said, is anywhere from 180 pushing like $250,000 at highest. And what's also interesting is we can see here this blue zone that the support found at the prior bear run bottom is currently where the price could be finding its local low support into some form of V or V-shaped recovery, or some sort of more drawn out U-shaped recovery. It could be something very similar to this, roughly similar to this right here, or even kind of roughly similar to this right here, where we see, like I said, kind of more like a U. This is more like a V. This is a V, but something along those lines, where we'll see over a multi-week, maybe a month or two, month and a half or so period of time, where we're seeing Bitcoin recover back up to prior all-time highs. Most notably here with the vector zones, the zone here, first one's around 97.5 to around 105,000. Second one here around 109.5 to around 113, and there's a tiny trivial one here, which really is just prior candle close all-time highs, approximately 118,000. So those, again, going to be some more zones to look out for. And to the bottom, or the downside, we could potentially see here, maybe let's say the structure here, this horizontal macro structure here, breaks and we see deviation down in this zone. Bitcoin could still definitely continue to go higher, but at that point, it's entering a territory of risk that me personally, I don't feel like is really worth playing around with, due to, as you can see here, macro horizontal local low structure has been very important, and then losing this one that's still currently intact is just not going to be very good. And what we also could be seeing here is we saw a impulse, a bullish leg here, and now we're seeing an ascending consolidation. We see ascending support potentially coming into play as we solidify support here, and ascending, this was an ascending resistance up here, and this is an ascending support. So we're seeing this move look along something along these lines, where we could have seen the typical A to B to C to D pattern, but now we're seeing something more along the lines of A to B, C, D, E, then to F, or something along the lines of, basically, to draw it out here, a pattern like this. And instead of seeing in the past with these prior moves something along these lines, we're just seeing A, B, and C. Again, like I said, kind of following in line with that extension, whether you want to call it manipulation, XYZ, I don't really think it matters. The market's doing what it's doing from a rather unbiased standpoint, and something really you can't get it through of at the end of the day anyways, due to the complexity of the markets and their personalities. Lastly, here for the monthly chart, to really put things into perspective, to go back here quickly, just to put this move here into perspective and how, as this bull run's progressed for Bitcoin, it's become sequentially lollygagged and it's extended, like I said, most significantly and most notably with our current leg, the final leg that I believe is a postulate that we're on. And so if we look here at this monthly chart, we'll see that the RSI has always had these monthly uptrends here in green. Every time it breaks, it lines up with the all-time highs going into the beginning of bull runs. We saw it there back in 2013, here in 2018, and then here in 2021. At the end of each of these all-time highs here, this would have been phase 1 of cycle 2, phase 2, cycle 2, the halfway point of phase 1 of cycle 3. Also, every time hitting in proximity to 2.272 in each of these Fibonacci zones when we take the bear market retracements. This is one of the bigger reasons why, at least just one of them, of the many, why I don't think the bull run's over, because, and not necessarily that this Fibonacci pattern has to uphold, but this is a over decade long, 14 going into 15-year long Fibonacci trend that is always projected quite accurately the all-time highs of the phases and the cycles. And we can see here that the resistance has been broken. The only comparable moment in Bitcoin's past history would be March of 2020, where we saw the major crash here. We saw the deviation. We saw a temporary break of the bull run support of the RSI that was not the end of said bull run. And then yet afterwards, Bitcoin then went into the brunt, the most explosive move of the bull run of 2020. And arguably, depending upon how you want to look at it, if you want to consider this entire move here, the bull run. But it, again, like I said, is very, very comparable. So it's really kind of the main emphasis here is that we have seen something like this before. And after something like this happened, we then saw Bitcoin go into a very explosive move. I don't think it's going to be like what we saw in 2020, but I do think it's going to be one of the more explosive moves of the current bull run. And then overall, this third and final leg here is going to end up being the most explosive move of the current bull run, assuming that my hypothesis ends up playing out, at least relatively correctly, hitting somewhere around the proximity of this 2.272. Like I pointed out, we're also finding support along the 24 SMA as well. Typically, that's going to be quite important as well. You could argue that, there's it acted as a very rough support here back in the March crash as well, kind of further drawing similarity between the two instances that I'm pointing out here with these deviations of these ascending supports on these RSI trend lines. And then just lastly to point out, we can see that the 786 to 854 zone is holding up as well. So this could end up acting as, again, further support amongst the plenty, the other things that I went over on the prior and the lower time frames, trying to give a holistic view here from the microcosm of Bitcoin up to the macrocosm, and just kind of try to paint a picture of, obviously my bias is thrown in here, but also looking at it as objectively as one possibly can. There's a very good reason to think that the bull run's not over. And the last thing I want to speak about briefly is the fundamental landscape to macroeconomic landscape. I'll bring an image up here. I brought it up in many videos ago. There's a number of points here. Some of them are still tentative. Some of them have become an actuality, such as quantitative tightening ending, which could eventually, hasn't yet, but it could eventually transition into quantitative easing, where we're seeing the balance sheets expanding, no longer being constricted as they were, which they were for basically the entire current bull run. So imagine how it's going to be now that tightening, that constriction is no longer on the playing field. There's also the cutting of the rates, which has been kind of happening over the last few months. We got to think about further liquidity injections going into the new year. There's a whole stimulus check that was thrown out into the air and was floating around the news cycle weeks ago. In general, the liquidity aspects are very important as we go into the new year. There's things like the Clarity Act, Bitcoin regulation, broader crypto regulation, potentially ETFs for altcoins becoming a major thing in next year. And there's plenty of things atop of what what we have mentioned in the fundamental landscape and this macroeconomic landscape that just looks so good for not just Bitcoin, but the broader blockchain solution space, specifically speaking about viable solutions, that it just doesn't particularly seem like we would, or rather that it would make the most sense that we're heading into what I believe is, whenever it ends up happening, I believe the next bear market is going to be the most brutal, the most drawn out and agonizing bear market Bitcoin's ever had. And to me, it just doesn't make too much sense to see that happening as we're going into all of these, which the fundamental macroeconomic landscape already looks, quite good anyways, but it's just getting better and better. Obviously, within America, we have the Trump administration. A full year hasn't even played out yet. So however that ends up affecting the economy, as obviously America's trying to spearhead Bitcoin and general blockchain solution adoption. So clearly, to sum all this up, we have the three major spheres here of analysis, where we have the technical, we have the fundamental, and then the macroeconomic. You could argue the fundamental, they're basically the same thing. But anyways, all three of them look, in my opinion, as objectively as I try to say, quite good, despite how bad the fear and greed might be. It's been sitting in extreme fear for weeks, maybe a couple, well, probably since October, definitely. So it's been approximately 3 months, but yet the price is still respecting proper structures, and that fundamental and macroeconomic landscape just seems to be showing more and more positivity upon the horizon going forward into the new year. But that was all that I wanted to go over and talk about and update in this video. So as always, none of this is meant to be financial advice, but everything said and all gone over, I hope you all enjoyed, and I hope you all have a wonderful day.
Such a